What's up, guys? I'm Nobody Special. We're going to do a short one about the oil markets right now because I think this is setting up for a really, really good trade this fall and possibly into the winter. But stick around until the end because there's one thing that could derail this trade that you really need to watch out for. Now, full disclosure, I still have no position in any oil trades right now. I am looking to start one very soon. Without going too much into the technicals, I can tell you oil is looking to put in a bottom here, but it just quite isn't there yet. You can check out some of my live streams or my weekly Patreon Zoom calls if you want to see a little bit more of the TA that goes into this. But for right now, we're going to focus on the macro. And here is the big one, and that is the Strategic Petroleum Reserve. This is America's emergency supply of oil. We started it in the late 70s in response to the OPEC oil embargo against the United States. And you can see in the early 70s, we filled up these big, giant underground salt caverns full of crude oil. And we've dumped oil from the Strategic Petroleum Reserve in the past in order to low prices. You see these little areas up top surrounded in these little dotted circles. After the first Gulf War, we released some oil from the SPR to lower oil prices. After Hurricane Katrina in 2005, we released a tiny little bit. And then again in 2011, when the Libyan civil war broke out, we released a little bit. But look at this massive dumping of oil that the Biden administration has done since April of this year. There has never been anything like this. Simply put, right now, the oil market is fake. It is rigged. Joe Biden is dumping our savings of oil in order to lower gasoline prices to improve his poll numbers. That means these low oil prices we've had since the spring are fake. And we can't keep doing this. You can see we're down to about 400 million barrels of oil in the SPR, but we've already dumped most of our medium sour crude, which is the oil that our refineries use to make gasoline. Most of the oil left in the SPR is now light sweet crude, which our refineries don't like for gasoline as much. Now, dumping of the SPR is scheduled to end on October 21st, conveniently just a few days before the midterm elections. And when that happens, 1 million barrels of oil per day of supply disappears from the markets. That's as much oil output as a lot of the medium-sized OPEC countries produce. This is not just a small amount of oil that's being dumped on markets. Look at the size of this release from the SPR compared to what we did after Katrina or after Saddam Hussein invaded Kuwait. We've never done anything like this. The level in the SPR is now lower than it has ever been. Keep in mind that initial ramp up all the way in the end there, that was the initial filling of the SPR. It's actually never been this low. So right now, oil prices, this market, it's fake. But that's not the only reason I'm bullish on oil. Check this out. This is OPEC failing consistently to meet their production quotas. This line here in red, this is the quota. This is the amount of oil OPEC swears they're going to produce every day, going all the way back to last year. And then the blue line, that's how much oil they've actually produced. Now, every time there's a headline that says OPEC announces production increase or OPEC announces production cuts, what they're talking about is changing the red line. But the actual oil produced, you can see it's actually nowhere near the red line. And actually, if you look since February or March of this year, when prices topped, you can see the production quotas have continued to rise, but the gap between the quota and the actual output has grown. What this is several things taking their toll on oil-producing countries, causing them to produce less oil, even though they tell us they swear they're going to produce more. And what are those things? Well, you've got ESG investing is choking off financing for the oil and gas industry. That means no new investments. That means wells get less and less productive, and there's no new wells coming online to replace them. You've also got this wave of civil unrest going on all over the world because of cost of living increases. That's causing civil wars and fighting to break out. Well, that all takes a toll on oil production. And let's not forget that there's sanctions and deglobalization going on right now. If you're a Russian oil producer and say a valve in your oil field breaks, well, what if that valve is made in Germany? How do you get spare parts for that valve? This makes it harder to maintain your equipment, and over time, as things break, it's harder to maintain them. It takes your toll on production. So between ESG investing, social unrest, sanctions, deglobalization hurting supply chains, it's all taking its toll on oil production. It kind of makes you think when OPEC announced that 100,000 barrel per day production cut last week, were they really planning on lowering production, or are they just trying to save face? Because keep in mind, as the gap between this red line and this blue line continues to grow, that means OPEC's credibility continues to shrink. So they need to bring their quota and their actual production in line if they want to maintain their ability to move oil prices just with words. And look no further than this story just breaking right now as we speak. Kazakhstan's energy ministry says oil extraction in the country's largest oil fields is going to stop until next October due to maintenance work. That's another country that's having trouble maintaining their production. Now, Kazakhstan is not the biggest oil producer in OPEC by any measure, but this is just another example of how countries are struggling to meet their targets. But wait, there's more. Don't forget the mess in Europe. Check this one out. Switzerland considering switching to oil for power plants. As Russia has now cut off Europe from the natural gas supply, Europe is looking to burn anything they can to keep the lights on this winter and to keep themselves warm. And that means they're bringing back oil for electricity, something they haven't done for a long time. This could bring a sudden surge in demand that hasn't been in the market for a while. This could further bid up oil prices. But like I said in the beginning, there is one big thing out there that could possibly derail this trade that you need to watch out for, and that is China. China is on the brink of a major, major economic downturn, the worst probably in at least 30 years, maybe the worst since Mao's Great Leap Forward caused 60 million people to starve to death in China. And China is the world's second largest economy, and a major slowdown in China, even a depression in China, will definitely put a big dent in global oil demand. So I'm watching this story. I don't think this will happen in time to derail the oil trade this fall or this winter. But if you plan on trading oil, you need to keep an eye on the economic slowdown that's happening in China, because major demand destruction in China could offset any new demand coming out of Europe or any reductions in supply caused by the end of the SPR dumping or the difficulties that OPEC is having maintaining their production quotas. Again, guys, full disclosure, I currently have no position in any oil trades, but I am looking to start one very soon. Stay tuned to my live streams or my weekly Patreon calls, and I will let you know as soon as I make those trades. Until next time, live small and dream big.